All right, welcome to Crypto Finder. I'm here with Dr. Shane Oliver, the chief economist at AMP. And last time we crossed paths, we were sitting side by side on the ABC 5 years ago. It was in
But you
2021.
don't think that Bitcoin will cut it as a digital currency. Why is that?
Well, there's a whole bunch of reasons for my skepticism. As a currency, it has to be acceptable as a currency, and it's incredibly volatile. On top of that, there's a whole bunch of other issues. It's vulnerable to hacking, security issues. It's bad for the environment.
Bitcoin. I just reject all of those things.
I thought you would, Fred. I thought you would.
And Shane obviously is a very much a seasoned and veteran pragmatist when it comes to markets. And we welcome you to the show.
Thanks, Fred. Great to see you again. It's
Fantastic.
amazing. It's been 5 years since we did that. Almost to the day. I think it was June or July, 2021.
Amazing. And it's been obviously from here, it's been an interesting path with a lot of institutional adoption to some extent, and would love to get into it as well. And Shane, where are you sort of at, would you say, high level now with cryptocurrency? How would you describe your posture?
Well, my posture is that, look, I'm still somewhat skeptical. Some of the issues we debated back then, I still have concerns about, but I think it is eking out a role for itself in the system. In some ways, some people may not like this, but it's becoming more institutionalized in a way. It's sort of gone from the fringes through the 2010s. By the time we were talking about it, it was sort of gradually getting there towards being more mainstream. Now I think it's almost there. I'm still a bit skeptical about whether we'll be using Bitcoin for everyday transactions. That said, I concede that we may use crypto in some form underpinning digital currencies at some stage. There's been a lot of talk about that. We may get there at some point. I think Bitcoin, though, is somewhat special in the universe of crypto because I think you said it back then in 2021. It was the first. And when everyone thinks of crypto, you think of Bitcoin. And I think it's kind of eking out a role for itself as a digital form of gold, digital gold. It's sort of, there's these sort of assets that come along every so often. Gold, obviously, many centuries ago, that are generally accepted as a store of value. That doesn't mean they go up all the time. That doesn't mean they don't go through horrible periods. But over time, they're seen as having the characteristics that make them a store of value, such as scarcity and a broad-based acceptance. And I kind of have come around to the view that maybe Bitcoin is sort of entering into that realm. You still got to be a little bit cautious because after we had that chat, Bitcoin then went way up. And I mean, a naive viewer of that program would say, you were right. And then it fell 80% into 2022. And then a naive viewer of that program would say, I was right. Then it went up again and had a tremendous rally to 125,000 to, I think, November last year. And then since then, it's fallen 50% again. So we've had a sort of a roller coaster ride, but in some ways, it's been doing what it did since inception, that every 4 years it goes through a bit of a tough patch. And so maybe we're in one of those tough patches right now in a so-called crypto winter. I don't know. I reckon it's really interesting right now to see whether it bottoms out around these levels, which is just fractionally below the February low. It seems to be hanging in there, 60,000 this morning, 58,000 yesterday. Seems to be hanging in there. But that's going to be really interesting to see whether that pans out or not. But that's my stance on it. And you may have read somewhere that some of our funds, some of our super funds has a very small exposure to crypto, and that was to Bitcoin specifically. And that was introduced back 2 years ago now. So quite a way back.
I just to sort of raise the point, and I know we were back then. I just quote you. Well, actually, the presenter actually quoted. She said, you said digital currencies and blockchain technologies have a lot to offer. You don't think Bitcoin will cut it as a digital currency, and I think that's important. That nuance you frame there as well in terms of its everyday transaction.
Yeah,
and now you really, I think that digital gold store of value piece. I think that is a definite difference there. I think stable coins are really showing some promise as well in in currencies. But in terms of one of the things I think you flagged quite heavily as well was regulation and stance back then, which was very aggressive, and very very much under the pump, and then now things I think really have adjusted. Where is your stance now? How are you sort of seeing regulation and its effect upon cryptocurrencies?
Well, in some ways, it's a good thing and a bad thing. I mean, if you're real into crypto, you'd say regulation might be bad because it potentially over-regulates and then squeezes out the value that it had to offer. I think regulation is trying to find that right balance there that, on the one hand, protects people who may not know what they're getting into and might find themselves getting ripped off. There's been various scams around Bitcoin over the years with exchanges running into trouble and people losing their money and their wallets, even though that shouldn't happen. And so that aspect had to be regulated, I think. But that regulation has some way helped make crypto more mainstream. Was the regulation, which I guess was starting through 2023 into 2024, and then the regulators allowed ETFs in crypto. So that was probably one of the biggest single changes, the ETFs, because it suddenly brought into the mainstream. A lot of people thought, well, I can't get into crypto. It's too weird. I don't want to go onto a crypto exchange. Look what happened to some of them. So I might go wrong. Whereas if you can get into it via an ETF on your stock market, then it became a bit more mainstream. So regulation, I think, is trying to find that right balance in a way, and that's the way all things go. The analogy was with the Wild West. Where back in 2021 we were still, if the Wild West was in the 1850s or something or other in the US, and then we back in 2021 it was sort of like 1901 or something. We were coming into the 20th century sort of thing.
Yeah,
and then it's become a bit more regulated since then. I agree with your point on stable currencies. I still don't think Bitcoin's going to be a regular currency. It could be. You could argue with that one, and there's a lot of people who do argue with me on that one. But I tend to think it's stable coins probably offer a bit more, and blockchain has immense benefits, which I think I did say in the program. I think there is a role for the blockchain, and I always have thought there has been a role. It's just trying to work out what precisely it is. I think one of the things with, Bitcoin, and this sort of changes, they keep talking about the Lightning Network and so on and so forth, speeding it up. But in some ways, the people who really like Bitcoin don't really want it to become a regular currency in a way. It loses some of the value that it has, and it loses some of its scarcity value and its rigor. If you have to change from proof of work to proof of stake sort of thing, it loses some of the rigor, and maybe that's for other parts of crypto to do, not for Bitcoin to do.
Yeah, and I think it's really interesting. I can see your you definitely dug into this as well, which is really good, because we talked about transaction costs being too high before. I think currently it's about 46 cents to do a transaction, which is quite effective. But you're right. I think there is this narrative, but chain in a bigger sense when you're talking about the store of value and where does Bitcoin sit. And you talked about digital gold and how reserve banks could potentially store that, and we've seen strategic assets from certain countries. But there's the bigger narrative. I wonder, and interested in your point on, is could Bitcoin become a global reserve currency in that different people are holding, different countries are holding it in certain different ways. Where is the sort of thoughts around that?
I think that's possible that it could. There's a whole bunch of things going on here globally. One is concern about the US dollar. So for the most part, in a lot of the post-war period, the US dollar was seen as the reserve currency, and still to some degree it is the dominant reserve currency. But you're seeing a lot of central banks trying to diversify away from that. Many have gone to gold. As always, there's ups and downs there. When the US dollar goes down, gold goes up, and that looks sensible. And then it goes the other way, it doesn't look so sensible. But I think one of the issues is that as trade and economic dominance shifts away from the US, I know Trump would like to tell us otherwise, but that's just the reality. Other countries are developing, and so China, will soon be the world's biggest economy in dollar terms, even though it's already the world's biggest economy in purchasing power parity terms. So, it won't necessarily want to do all these transactions in US dollar, and it also realizes, and I don't think there's anything necessarily wrong with this, but it looks at what happened to Russia with Ukraine, where Russia gets its assets in the US confiscated or frozen. Same with Iran. I'm not necessarily saying China's going to do anything on the same scale as those countries, but it kind of worries, well, does it make sense to have all our money in US dollar assets? So they therefore logically move on. And then the question is whether they go to gold. Obviously, they've gone to gold to some degree. Will they go to Bitcoin? I think if Bitcoin starts to be seen as a global store of value like gold is, then there's no reason why that shouldn't be the case. I know people say, well, gold is different, and older people like me probably think it is. I can touch it. A lot of people watching this would say, that's why I like residential property. I can touch it, and I can touch gold, whereas Bitcoin is off in cyberspace somewhere. But younger people who are more familiar with cyber and conduct their whole life digitally, so to speak, may not have that same desire to have that touchy-feely thing. And therefore, it then sort of starts the process of becoming more accepted as a store of value. So if it starts to be accepted as a store of value, much like gold has, and I know a lot of people might think, okay, well, we use gold in teeth. Well, we don't anymore. We use gold as jewelry. Gold as jewelry is a tiny fraction of the gold that's actually held. Demand and supply of jewelry has very little impact on the price of gold. In fact, it's insignificant. But the real value in gold is that everyone just accepts it as a good store of value over time. It's internationally accepted that way. And so I suspect that we may be going the same direction in Bitcoin over time. And some of that is evident in various institutions accepting it, the shift towards allowing ETFs in Bitcoin and so forth. And I suspect that's the direction we probably go in. I know at the time we had the discussion back in 2021, El Salvador had just accepted Bitcoin as legal tender. And there was optimism that, well, other countries would follow. I mean, my skepticism around that still remains. Yeah. It's of value if you're an El Salvadorian and have relocated yourself in the US, because El Salvador is not that well off. So you relocate there and you want to send money back to your parents. It costs you a lot of money doing conventional banking, doing conventional ways. And so Bitcoin is a good way to do that. No doubt about that, even though that cost is still there. Whereas if you're in Australia, you're not really looking to do that. So that's why I think there's a difference there, that it might sort of become a transactional currency in some places like that for that sort of transaction, but not necessarily globally. And when you think about Australia, now we've now got a situation where the RBA's banned card fees. So if you're doing a transaction using your debit account, you got no fee on it. So why would you bother with the complication of going to Bitcoin, where there is a fee involved in the transaction, there may be delays and so on and so forth. So in that sense, I don't think it's going to happen. But that does not rule out some kind of blockchain being involved in that transaction in time via a digital currency. That's a separate thing. But it's just that you would not be incentivized to go to something that costs you more than close to zero or zero, whatever it is, that you'll soon be doing it with debit cards, and I think many credit cards which won't have transaction fees.